Hey, what's up guys? Today's video should be nice, short, and to the point. We're going to talk about the SPY, the NASDAQ, the IWM, and the crypto markets. So without further ado, let's get started with the video. And of course, number one, before we even get into that, I just want to show you guys how on a live stream today that I do completely for free, we caught SPY plus 70% gain together. And then I didn't take this second trade, but many people did, and the SPY went up plus 30%. So if you guys want access to the Discord server, the link is going to be in the bio description. If you just want to watch the stream, you could watch the stream on Twitch or YouTube or any other social media. I'm live on everything, and it's all completely for free. So definitely join and you'll get access to everything and it'll be great. All right, so let's get started with the rest of the video. All right, so obviously we know that there is bullish CPI data as well as bullish PPI data. We also had two closes above this 417.50 level that I wanted to see, which would give a good indication of like this being a support level and a continued move higher. So for now, the market is bullish as long as we can basically remain above 417.50. And currently having two closes above that level is very important. What was interesting about today is that the SPY opened exactly at a very important level of resistance. So going back, you can see this level acts as a major supply and demand zone, right? But it also acted as very, very important resistance back in May for a very long time. And then it acted as support once more in July. So this is that same level here. It's the same trend line. And now we're just extending it. And you can see that the SPY opened exactly on it today. So we had that push upwards earlier on in the morning, but then from there it could not sustain itself above this level and it fell. So this is still a very strong setup and very strong momentum regardless. We can still even break 420. We can end up breaking 418, and even a test of 417.50 would still be bullish, because this would just be an indication that we want to come back, see if this is a solid level of support. We might even wick down a bit. So that is exactly why I think that the market can still fall back down to 415 to 416 and rip back up higher into newer highs above this level, get everyone bullish, and then from there, if they want to bring it down, they could bring it down. Even it would be more beneficial to them to do so in that way, because I would argue more people would become bullish. So essentially, you know, there are various different major layers of support. You can clearly see that there's still upward momentum in the market. This day today was not a reason to automatically become bearish. You still have to remain and buy dips at support while we're still in an uptrend. This is still clearly an uptrend. Were these two candles the break of bullish momentum? No, we were still saying that you have to keep on buying dips at support. And what ended up happening was an 8-point move overnight, and then continued today because of positive PPI data. So a lot of things that people were afraid of, if PPI and CPI data was not bullish, then it wouldn't really make as much sense, and the market probably wouldn't be this green, but they were. So you have to just play with the cards you've been dealt. The MACD is also moving up a bit more here. You can see that it increased from 245 to 3.39. That was a nice substantial move. So it's good. It's allowing the indicators and everything to catch up, cool down, and even if there is some sort of stagnation here where we do fall back down to 417.50 or potentially 415 to 416, that's still a really good buying opportunity. This is still maintaining a lot of upward momentum regardless. Even if we were to come back down and retest like 414, unless some really, really important thing happens in the market, or we just have a really, really disgusting setup where it's just an automatic, like it just looks bearish, so it's tough to argue that there's any bullish momentum remaining. For now, we have to continue buying dips at support, in my opinion. And until the upward momentum is broken, we have to remain bullish. So this is a chart of the NASDAQ. The MACD on the NASDAQ, the MACD on the NASDAQ is still falling lower. Yesterday was 2.48. Today it was 2.17. So it's still giving an opportunity for the NASDAQ's MACD to even out a bit as well. You can see that we're clearly less strong than what the SPY was today. You can see the NASDAQ was the biggest loser for the three indices. And just zooming out, this is pretty much as clean as a V-shaped recovery that we could have imagined during, obviously so far, but we could have imagined so far during a major downtrend and recession that we're currently supposed to be in, right? So you can obviously see there's a lot of support here at 317.71. There's also a lot of support at 320. There's a lot of support still remaining at multiple layers right below us. So that's why I'm saying, like, you would need to have a big definitive break of momentum and a lot of weakness for buyers to want to stop stepping in, because there's a lot of cash on the side. We can see that there's a lot of buying pressure intraday, but there has to start being a reason why people will stop buying. Because currently the way that things are going, we can see NASDAQ to 338 soon, maybe potentially even next week. But obviously, I still, we have to remain bullish to buy at dips at support, right? But these MACD indicators and everything, there needs to be a period of stagnation for us to continue moving up higher, because this is still way, way too strong. The MACD is falling lower, yet the NASDAQ is not really falling that low. So that's a clear discrepancy there. That's that's actually bullish divergence. So there shouldn't be any bullish divergence at the top close to resistance. So obviously when things look that strong, they're not actually strong, which is what I argued in yesterday's video. And the IWM did really, really well today. It's actually really, really insane how much buying pressure that we're seeing out of all three of these indices. So we closed right above a very, very important level of resistance here at 168.28. And again, there's just multiple layers of support. So just looking at this, just zooming out, this is clearly bullish momentum. You have to continue buying dips at support. Otherwise, you're going to keep on trying to short this intense strength. Some days you might win. Other days you might, this was also kind of a win actually, but other days you might lose. So it's not really worth trying to short strength just now. Just follow the momentum. All right. So that is my analysis for the overall stock market. Let's go ahead and take a look at the crypto market. So Ethereum has announced its date where the merge is going to occur. So obviously this was a bullish situation for Ethereum. Similar now when taking a look at Bitcoin, we're still moving up higher. We're wicking, right? We're wicking right at that level of resistance I was talking about yesterday. But we need to get a close above this level at 24,700 basically. If we can get a close above that level, then we can see 27,000 in my opinion, or 28,000. But this is not a good sign that we're wicking like this. But this still definitely shows upward momentum. To continue on higher, this Bitcoin would need to basically hold 23,600 for a continued move higher. And aside from that, I hope you guys have an amazing day, and I will see you guys tomorrow on the stream. Make sure to tune in, subscribe, like the video, do all that good stuff, and thank you so much.